Good morning, guys. It's Simon. I believe I've got the recording issue resolved. I think I've got the sound issue resolved, and I think this will also get the upload issue resolved. So let's kind of jump into, and hopefully this will work. I'm going to keep it relatively short. So let's jump in. Yesterday, I said in the morning I was expecting the from rotations lower to get pushes back up, and that my focus was on the long side of the trade. And even if I had been there, I most likely would have been sidestepping the short side of the trade. And obviously, we had a down day yesterday. So if you look from what I could piece together, because I wasn't here, the majority of that downside move came, meaning the break below the 2093 to 2095 support resistance zone, came and coincided with the horrific attack that we had in California. And when news breaks out, zones only matter. To support resistance only matters as long as there's not outside information influencing it. But as I tweeted last night, these incidents, while horrible and scary as hell, as far as market impact goes, have almost no long-term impact. And as a matter of fact, they usually don't even make it 24 hours. And as we're talking right now, we're trading at 2092.75, which is, if we look on this chart here, we've traded all the way back to just behind this 2095 and a quarter, 3 ticks behind the back of this zone. Is Globex high right now? We'll see where Globex high lands, and I may adjust the zone accordingly, right? But I wasn't sure whether to be aggressive here. Either way, the point is, before I get off track, I haven't quite woken up completely yet this morning. I've been trying to figure out what the problem is here, recording-wise. But the point of the two issues here, this whole blue area right here, see this? Completely poorly auctioned, right? I knew if we got above 2083.75 and held, that we could trade up to this 2092.50 to 2094.50 in zones higher. What usually happens is the news event happens, the market rushes down, gets sellers, and then we retrace the entire move, right? Had this happened earlier in the day, and they could have concluded the information, right? It's in California, so before we ever got a chance to get towards the end of the day, we couldn't get a resolution to the issue. As news came out, we got a resolution to the issue, the market completely retraced. And so in essence, this entire move, in my mind, the way I treat it, did not happen, right? So clearly there'll be a gap up, but the way I treat this is we're just gapping back up into a chop range, right? And I still think that, and then you'll also notice, it was very interesting, people were citing not just California, but they were citing the Fed, and they were citing commodity prices getting crushed for the sell-off. And if that were true, right, so this is how I look at it. If that were accurate and that were true, that may come into play as the market moves ahead, right? People may start to care about the Fed. They may start to care about tightening. They may start to care about commodity prices, right? But they haven't to this point. And if that was the reason for why the market had rolled down last night, right, we would not have recovered as news came out about this incident, that it was contained, number one, and we would not be back, I don't think at least, trading at 2095. That's my 2 cents worth, right? So if I were going to put a floor in on the day, I'd say as long as we hold this 2090 trade area, I'll probably come back in here and rework this based on the overnight, but I'd say as long as we hold this 2091, 2090 area. I'm not sure whether I want to move this down or up. I'll figure that out here in a couple minutes. I'll go back and look at it. But as long as we hold this general area, right, back to the backside test of this 2089 area, right, I would say the upside the upside trade is still intact, and that we still have 2108, 2110, followed by 2113 to 2117 as key areas above. And I still favor, look, even when markets move down hard, right, we usually end up with a U-turn type of structure. Let's see if I can get this here. Nope, I sure can't. Didn't want to do that, but I did. Let's see if I can recover it. Hold on one second here. where in the world? There it is. Okay, so anyway, I was going to get a drawing tool, but essentially 21.14 to 21.17 above, and then above there is new highs and same trade plan as yesterday, right? So the other point about this that I wanted to bring up here this morning, and I'm doing it right on time, is two issues. First of all, the move like this, this is exactly why stops are put in place. All right, let's go back to yesterday's chart so we can see this. This is exactly, so news came out, right? So given we're in a news environment, right? First zone hits. So first of all, let's go through the zones really quick. I probably would not have taken the short even if I had been here. NQ was traded at new all-time highs. I don't like to short new all-time highs. It's generally not a profitable strategy for me. First time into the zone here, looks like we went from 2095 to about 2096 and a quarter, 2096 and a half. Unable to attain that 2 points off the top of the zone, right? The market got kind of just flat. But look how much time we spent here. 5, 10, 15, 20. For me, in my eyes, the worst case scenario is you either get out flat with a slight profit or a 1 point loss. In this scenario, at this zone, as everyone knows, I do not like to stay in the zones, particularly without a huge stretch beyond 20 minutes, and really 5 or 10 minutes quite often is pretty satisfactory to me, especially, right, 2101, 2091 is the first 10 point stretch, right? Remember, the news broke just about 1 o'clock, so, or just after 1 o'clock from what I can tell when I went back and looked at it. So this is 5, 10, news hits, 15, 20. So if you stayed in for 20 minutes, you probably took a 4 point loss realistically on this trade. If you, again, going back to the webinar I did last week, you can mark, 5, 10, 15, 20, 5, 10. You're going to start to get a pattern here. Open gap, again, at the open gap, half size double stop would have kept you in the trade. If you held overnight, it would have given you a shot all the way back to this 2095. Obviously, I don't think any of us trade overnight in the room. I think I got 1 or 2 European traders that may trade overnight. But there obviously was no slingshot, and again, this is all news related. You will notice, even in a news environment, right? Look, we get down to the end of the day here. This is the last hour, right? People who tried to press in the last hour, meaning initiating shorts in the last hour, yeah, maybe you got lucky and you got this 2082 to 2076 move, but it was very hard to stay short in this last hour. And if you try to hold the short overnight because you're thinking this is it, again, people tend to get bearish too early, and then the market starts, and then the market reverses on them. And again, the move back to 2095 I thought was pretty logical. I thought the event was pretty contained. So for today, a couple of things. If we look at, let's see here, let's pull this. Drag this over. We go to factory. So we have a slew of data. So let's scroll down here and go to today, and tomorrow. So number one, that's I believe this is set to, it is set to Central Time. Okay, so important, biggest thing on here, at 9 a.m., Fed Chairwoman Yellen testifies, and we get ISM non-manufacturing and factory orders all at the same time. 8:45, so that's 9 a.m. Central, 10 Eastern, 8:45 a.m. We have final services PMI, and then also at 7:30 Central, 8:30 Eastern, we have ECB press conference as well, along with unemployment claims. There is a ton of economic news and data. Additionally, At 12:10 p.m., right after New York lunch, we have FOMC member Fisher speaking. I think that's it. That's enough to kill most horses, right? So, again, I still believe with the way the market's behaving that we are likely to come up and test those upper levels. I think rotations down can be bought for pushes back up. Last night was a great example, right? And I think even under most circumstances, with the exception of if you look what it's taking to push the market down, it's taking extreme events to get the market to go down. It's taking a Turkey shooting down a Russian fighter plane. It's taking horrible shooting in California. It's taking the Paris incident to make the market go down. And then the market springs right back up. So that is not the sign of an unhealthy market. And as I was saying in yesterday's market preview, the market will be easier to short after it breaks, but it is a sign of a healthy market when it rebounds immediately from events like this. And while I understand that it's not going straight up and that the long side trade, obviously yesterday was challenging, right? And the short side trade was easier. I'm quite certain that over time, meaning over days, weeks, and months, when people focus on the long side of the trade versus the short side of the trade, their P&L seems to be better to me. Maybe I'm wrong about that, but I know it's true in my own trading that when I focus and look for long side trades, at least until after the market is broken, I tend to do better in those trades, and the market just simply is not wanting to go down. Now, it is also, remember, if you look to the left on the chart, it is in a chop zone. The other thing I want to bring up is for tomorrow morning is that we have non-farm payrolls at 7:30 a.m. That can bring outsized volatility on certain occasions. I'd like to say it used to be all the time, right? But it can be, I've seen as wide as 40-point swings on each side of the market. The last non-farm payrolls was a non-event, basically. So I don't know what to expect from NFP tomorrow, but I do know that I will be sidestepping it, and I will not be trading, by the way. I will not be trading today or tomorrow. I will not be in the room. So anyways, that's my 2 cents. If we go back and look at the chart again one more time, right? The area that offers the most amount of risk, and there's not a zone there, right, is from this point, this 2094, let's call it 2092.50, all the way back down to 2083.75. There's no zone there, right? It's a lot of territory, but no zone. And it's because it's all poorly auctioned to the left. The market likes to re-auction. Obviously, we could push down to the open gap. I don't think, well, I don't know because Yellen's speaking at the top of the hour, but I don't think or expect to have a significant move back down without some kind of news-driven event. But again, we have Fed speakers. It's hard to trade in this environment, and I'm certainly not going to take one of my vacation days to try to trade around the Yellen, so or non-farm payroll. So that's my 2 cents on that. I'm going to go back and look through the zones one more time, look at the volume profile. But if we take a quick peek at the volume profile, by the way, I still think on most days, see how when we came down into this trend line right here, they attempted to hold. Like obviously, I wasn't the only one looking at that, right? They tried to get a responsive buy off of it right here, and they backside tested it for the downside break right there, and then overnight it was respected as well. So my guess is this. My guess is even if we do roll down, that unless it's, again, hardcore news, which is possible today, we have Yellen speaking, that they will attempt to hold above on this trend line and push back up. That's my 2 cents. I'm not bearish. I understand that we're near a top and that people think we need a correction. I do too. I think that we need a correction, but only from an intellectual standpoint. The chart is not saying anything, but buyers are in control. We're getting constant responsive pushes back up, and until I see them break the backs of the buyers, that's going to be my stance until I see otherwise, because that's a profitable stance for me to take overall. One last thing, let's go look at the volume profile real quick. 15 minutes in, I wanted to be shorter than that. And I want to note one other thing. So sometimes I'm really certain of what the market's going to do, and sometimes I'm uncertain. And I've noticed that when I tend to stammer around like I have in this video, I usually do them at night. It's early in the morning. Well, not so early. It's still 8 a.m. here. It's 6 a.m. at home. When I stammer around, it's because my degree of certainty is lower, right? And so I'm going to need more evidence like tick divergence, divergence between the indexes. I'm going to need to recognize what I'm looking at in order to trade in this environment, right? And importantly, look, we're adding Yellen to the mix in what was already kind of a crazy day yesterday. We have the ECB president. That's kind of adding to the craziness a little bit, right? So I've noticed when I do these videos and I go back and listen to them, when I'm have a lower degree of certainty, what I want to do is pull back in my trading and watch, right? What am I looking for as a trader? I'm looking for repeated patterns. I want to see who has the strong hand and who has the weak hand. Remember, just because we are traders does not mean we have to trade, right? Companies, militaries, all kinds of organizations put a lot of effort into observation and reconnaissance information before they make a decision. Consider that in your own trading before you say, hey, I must trade or I have to trade this particular market, right? No one is forced to trade. You don't have to trade today. Today and tomorrow are probably going to be pretty challenging overall. That's my 2 cents about that. Okay, if you look at the volume profile, right, what's the one key criteria I've had all along here? We've got to get it closed below 2080, right there, right? And we've still failed to get it closed below 2080, right? The market has held up above there. We're trading back up here at 2094, 3/4 now as we speak, 2092.50, and we simply haven't broken. I need to see us get below here. Is it possible today? Yeah, we closed at 2081.50 yesterday, right? We could get it closed below, and that could open a new door where this 2080 now becomes resistance, and we can get a push back towards that 5060, and maybe even down to 2014 and this 2008.50 level, right? But as far as I'm concerned, that's a fantasy. All of this getting re-auctioned is a fantasy unless we can get it closed below 2080. We haven't been able to do it yet. So that's my 2 cents on the volume profile. There's multiple tops here. I'm sure everyone's betting on it. That's going to fail. All I can say is if we can clear this high, we should be able to push buyers back in for a year-end rally. If we can get below 2080, I don't think we'll have a down market. What I think is we'll end up with is a two-sided market, re-auctioning this area back down. I think it'll get pretty slippery if we can get below 2000, but again, that sounds like fantasy land to me from where we're standing right now, and given the current environment and having to have extreme news events in order to get that market to move to the downside. So anyways, Yellen on tap, ECB president on tap, non-farm payrolls on tap, crazy news out of California. I'm not worried about that. That's the minimum at this point. I still think rotations lower with pushes back up are the best ways to trade it, barring outlandish news. So anyways, everyone have a great day. I will not be in the room today. I will review the charts, and if I have an update, I'll post them on the stream, and hopefully this uploads with voice. Talk to you later, guys. Have a great day.